Good morning, ladies and gents. Good morning. All right, let's get this started. Let's start the day off by congratulating bulls. For those bulls that swung overnight last night, whew, what a gap up today. My God. Volatility is definitely here. Look at this. So if you swung from the close yesterday, where is that close? Let's pull up the close. 2 o'clock right here. Whew. 2 o'clock. Then look at the after hour immediate action. Sorry, 2 o'clock right here. After hour, one big sell, immediate buy up. If you were to swing from yesterday's close up to now, it's what? Wait, what? It's only up 1.5%? I must have been thinking from here then. Yeah, okay. Regardless, congratulations, bulls. All right. Tons of gap up today. Maybe a few tickers that we're going to be wanting to take a look at. Let's. I'm going to just do a quick scroll over the watch list here. Tesla gap up 4.4%. Ford is 5.5%. Nvidia 4%. Microsoft earnings 5% gap up, but I think the implied move was 6.7%. So options might be getting slaughtered here at the open. It's decent earnings. 5% gap up. Straight into that upper trend line. Wow, look at this gap up, eh? So we held the support zone. Support resistance in a must hold zone on Microsoft. I think this might be a good deal on Microsoft. Looking back at how much is it raised? 130, 350, so 2.5% roughly. Sorry, 250%, I mean. 150% I meant. So 163% to be exact. And we're holding the key zone. So for this is lost, we're looking back down at 260s. But Microsoft, nice gap up into the upper trend line. The whole market's gapping up. Ford is still the one that's still holding up. Tesla, yeah, holding up decently. AFRM, actually a lot of the growth names are gapping up very nicely. AFRM 5%, Laser 5%, Matterport 6%. PLTR 5%. Oh, it's been a long time since we looked at this chart. Head and Shoulders bear break. Woo! Wow, what follow through on this Head and Shoulders. Ooh, I hope someone played bear on this. My God. Oh, that's so GG. All right, Zoom. No. SLI 10% gap up. EV. Lithium. Man, I was thinking of playing this. Head and Shoulders. Yeah, 675 was a must hold. Not a whole lot of follow through so far. I want the ideal entry, $5. SLI 10% gap up. That looks nice. One of the rare charts out there that had a gap up in continuation yesterday instead of a gap up running and then selling towards the end of the day. So SLI is actually looking decently. Not after this 10%, of course. What else we got here? DNA 5%, DNMR 7 to 8%. Just trying to see what's gapping up or down very nicely for a play, maybe volatility. So SLI, DNMR. I sort of want to pull up SLI chart. Oh, BBIG is gapping up very nicely. Is that a 20% gap up? That is a 20% gap up. Congrats, BBIG bull swingers. Wow. 20% gap up. 1,000 shares, it would have only cost $3,000. That is very nice gap up. All right. Let's see what else we got. Docs, RBLX, both 5%. BitF. Did it move yesterday? It closed right where Monday's close was. BitF, Bitfarm, 8% gap up. It's kind of decent. What's Bitcoin doing? Lost the money line. Hey, bounced exactly from where we were looking at before. The 1-to-1 extension target plus the key support resistance. It's bouncing right from there. Coming up to the daily 8 now. And potential backtest. So watch for reaction at the money line. Bitcoin. BitF. Let's see. Space. Logitech 6%. Nice follow through. GP hold. Wow, GP hold. Hey. Oh, I set my alert on the top side. That's why. Yeah, this is a GP hold. Right from the pandemic low to the highest GP, and now it's seeing a very nice bounce. Earnings was positive as well. Whoa, nice earnings. 26.12. Yeah, that's a very nice earnings. Okay, that's why we're seeing an increased bull volume yesterday. Continuation, and now today we're seeing another continuation. The key to break is still right here at about 86. Especially with this 6% gap up now. Making it a little bit less attractive, especially now that there's a support here, rejection here. Straight into support resistance, I would say. So there is a zone, a mini zone in here somewhere. You could say for Logitech. Let's see. Right about here. Yeah, so that is going to be key to break. So we are gapping up into support resistance. Let's see if we get a higher low. There is a gap, a slight gap left behind here from the GP. Increasing bull volume. Very nice bull volume. Yeah, bull volume indicates there should be higher prices coming. Logitech, I quite like the chart here. FNGU for 8%. Really? Gapping up into new highs. Surpassing Monday. SOXL is not. But it's still 8% gap up. Yesterday is a minus 11%. So it's not gapping up straight past Monday's high. I like the look of FNGU actually. With that, with the FNGU gapping up above Monday's high, yesterday's volume is not a whole lot. Yeah, yesterday's volume is not a whole lot. Looking at this, if we're to make new highs, if we see continuation, this could very well mark the bottom for the big mega caps. So what's inside here is Tesla, Apple, Baba, Baidu, Twitter, Facebook, of course the whole FANG stock. But yeah, keep an eye on FNGU, 8% gap up. That's very nice. That's it. Looks like there's not a whole lot of gap up and gap downs. Good morning, Darren. Is Powwow speaking at 2 p.m. as usual? She just marked that on the calendar, kind of a thing. Is that the time that she's speaking? Because if so, then the plan today will be sit, relax till noon. Especially with this gap up. Now let's discuss market. SPX. I might switch over to look at futures instead of SPX NAS. Or we'll look at ES1 kind of a thing. But I'm gonna have to do a little bit of digging into what the benefits are. So looking at SPX, we are at this No, 1 hour. The one messy chart. So let's discuss over big overall picture first. 122 extension target. We saw a huge wick on Monday, straight into that key zone and straight bounce from that key zone. And then yesterday we saw ultimately the last hour was a big sell off, but we saw a hold of this part of the zone that we're looking at before. But it's not that important of a zone. Ultimately, you look at the overall price action, this was the key zone that had to hold. 122 extension target as well, so that did hold. And from here, hourly, what I'm looking at here is this previous minor support here, another minor bounce here, another bounce, not really a bounce over here, but then there's a multiple rejection. So this minor zone in here, in between 44.26 to 44.38, that's the area that I'm looking at, which is what we're opening up right into. So with that, then there is a chance that we can see a breakout fake out, and if we do see the breakout fake out, we know what that means, right? If we see the breakout fake out, GTFO and get the fuck out. And then if you're in bulls, of course, if you're in bears, that might be the very nice entry, because the GG trendline back test is coming up too. So this red trend line that we were tracking before, going all the way from back to pre-pandemic, there's a rejection here, rejection at the pre-pandemic high, and then rejection on this bounce again, another one over here, and then became support, very clear support over here, and another one over here. So this is a key trend line that we'll be looking at for this bounce. So far, bears are already showing up in this minor resistance zone. Ford is still holding up very nicely. So with the outlook now that I'm thinking is watch for reaction at the GG trend line, because we are gapping up so much. Now the interesting thing is, I don't know if you can call it gapping up so much, because ultimately yesterday's close, depending on how you look at it, when the market actually closed at 2 o'clock, from here it's only 1.5%, but regardless, looking at that 4-hour chart, we did make higher high. So this is very key to note. 30-minute, 1 hour, 4 hour. 4 hours is the very key one that we gotta make a note of. So lower low, you could call this a lower high. I don't really like it, but it's a huge bounce, and regardless, lower high, higher low, and now we're seeing a higher high. But the bears are showing up now. Already trend, yeah, very clear uptrend. So lower low, higher low, higher low, higher low, with the back test of that short-term trend line that we're watching yesterday. So we did break that trend line yesterday, and then as soon as we saw spiking bear volume, that's when I said, get out, take your profits. It's still choppy. Hey, if you didn't, congrats. There's a big gap up. So as one of the messages I shared in our trading chat group today is this is looking and reminding me like sort of like pandemic times. Strong close on Monday. So strong close on Monday into gap down Tuesday. Weak close on yesterday into gap up today. Just something to keep in mind. Is there a pattern? So 2 days, that's always something to note already. So 2 days back to back, this could be a pattern. Now I remember one of my first and biggest, one of the biggest option plays was from back here, pandemic times, exact same pattern, strong close, gap down, weak close, gap up. Did I think if I remember correctly, it was like a SPY call, and then added the end of day, next day it gapped the F up, and that was amazing. So just something to keep in mind. If we're to see a strong close, I guess we'll see how FOMC is, but with the gap up into FOMC, I don't imagine that we're gonna get past the upper trend line. So the short term wise, this is still the upper trend line to watch. I don't really like that trend line. And why is there two? Yeah, there we go. That looks a little bit better. Okay, we'll call that one. Let's mark an alert on this one. So this is the upper trend line to break. On the break of this, and we're already seeing 4-hour reversal. 8 hours is looking fairly nice too. Ultimately, this is still a trend down though. So overall, this is still one trend down. We're looking for that lower high into a higher low. Maybe even a lower low marking a bull divergence. There's no bull divergence here. This is not a lower low. So maybe even into a lower low bull divergence before an actual pop. But ultimately, this is one move so far. So 8 hours, we are still looking for that lower high. But hey, FOMC can just say screw you and pop it right away. The 1-to-1 extension target is lining up with key zone above at 44.84. I'll move this forward. 44.84. So short-term wise, key to break for today will be over here. If we were to get up to 44.84, that will be around that area, 44.84, 4,500. That'll be the key area to watch for a potential rejection, which makes sense. You know, if you see a big upper wick, ultimately this is going to be the back test of the GG trend line. Then we can be seeing some very strong bearish action. So that one of those two areas, the GG trend line as well as the 4,500 area, that's going to be a decent bearish entry if that's the direction that you're looking to play. Ultimately, what I'm anticipating for FOMC today is same as anything, you know, just take an example, the most recent example at least, 30-minute, take a look at this, extended hours yesterday. So it was a very nice green earnings and it's big sell off the bat. Initial reaction generally are fake reactions. So that's exactly what I'm looking at for FOMC, initial reaction, whether it's going to be bearish or bullish. That should give a direction of the true reaction for afterwards, and that's the plan, is to play that specifically, whether it's going to be bearish, bullish off that first reaction, play the reverse of it. What I'm looking for specifically on today's FOMC is, because me being somewhat bullish, especially with the things I'm reading a little bit, the agenda of what they're looking at, I'm looking for that initial bearish reaction. Let's see, where would be a good area? So if we were to reject from here, see how there's a minor bounce over here, and then multiple rejections. So this area, if we're to have initial bearish reaction on FOMC, that would be ideal. Come down over here, initial, and then true reaction. Then we watch for the reaction over here at 4,500. Yeah, I like that. Good morning, miner. Feeling much better? Are you fully recovered now? Let's get into some tickers. First one I wanted to take a look at, and then let's see. Hey, what tickers are you guys looking at today? Ford is definitely holding up decently. Tesla is pretty good too. Let's take a look at that Tesla. We'll start it off with our usual stuff. Tesla. Let's take a look at that. Tesla, 4.3% gap up so far on the daily. What we're looking at. Oh man, this chart is getting messy too. I really gotta start cleaning up my charts. Hey, so 1, 2, 3, 4, 5. As I was mentioning in our group yesterday, that this could see a extended leg 5 run. Ultimately, we saw the test of that monthly 8 last couple days on this bearish move. Regardless, on this bearish move, we saw a touch of that monthly 8 again after the December touch of the monthly 8. So from here, this is still a monthly bull flag. Okay, this is still a monthly bull flag. We are still holding that monthly 8. And if we're to see a reversal from here, bulls are coming into the market slightly again. So if we're to see a reaction from here, we could see it an extended leg 5 run before an actual pullback. So with that being said, earnings coming up tomorrow? Today. Earnings coming up today. I really like this area though. 855. That was the money line that this bottom zone, multiple bounces, multiple supports. This is a strong support. And if you were to zoom out, you'll see another 3 supports from back here as well. As you can see on this money line trend line, we draw it from all the way back here, that second point, and we're still seeing multiple supports there. So that's why we saw a huge support, big bounce. Well, aside from the market as well, big bounce on Monday, and yesterday was decent. It was okay. Earnings decreasing volume. Earnings coming up, so today with the earnings, should see direction. Regardless, if you got an entry here, there's no reason for exit until the loss of this trend, these lower area. Lower money zone. All right, so that's Tesla. Let's take a look at Airbnb. The reason why I want to take a look at Airbnb, it's looking across my board, and it hasn't been updated for some time now. Because I haven't really been doing too many ticker dive, or everything looks roughly the same anyways, especially on this reversal. I would anticipate a market-wide reversal. So to be specific, on this reversal, I'm focusing on ETFs more so than individual tickers. And it's just going to be a lot more work looking at individual tickers. Netflix still bearish. Looking at this, Airbnb, I like the chart because we did hold that zone. At the top of the zone, we lost the money line, so this is a lack of follow through. Looking at this chart, the money line where we saw triple bounces from recent and then multiple bounces from before, so drawing from the IPO low, one somewhat of a bounce, not really, a little bit of a chop as well. So 1, 2, 3, 4, 5. Won't call this one. 5 bounces from that money line. We lost it, come back to the key zone. Immediate buy up, and then yesterday was an inside bar. Today is already opening up above yesterday's inside bar, so this is kind of bullish to me. Looking at this chart, I like Airbnb. The daily linear regression has now been bent sideways, and what I mean bent sideways is when we look at this could go either way. This blue line, I don't know if you can, let me switch back and forth. So this, very minor, very light channel. Over here, this is linear regression. So with this linear regression, this could very well go either way. There is room for this to bend more bearish or go bullish. So the upper trend line and the lower trend line, there's room to either side. We'll make more. Yeah, actually, this is hard because there's this one holding it up from going upwards. This one holding it up from going. This one holding it up from going downwards. This one holding it up from going upwards. Might be sideways action for quite some time. Regardless, even if that's the case, looking at this, there's a lot of room to move to that upper trend line, 30-some%. Airbnb. Lack of follow through on the break of money line. And for those of you that missed it, one thing I'm noticing, FNGU, which is FANG's triple leverage, so you can't really use this for underlying assets. If you can it might be better to use the FANG's non-triple leveraged, which I can't remember what the ticker is. But regardless, FANG, FNGU, triple leverage is gapping up above Monday's high, so that is notable, showing potential for bottoming process, especially for the mega caps. Let's take a look at Amazon. Inside bar yesterday. Okay, so inside bar yesterday, earnings coming up on February 3rd. Daily is oversold. Not often you get daily oversold in the 20s. Daily RSI is in the 20s. Last 2 times was high 20s. The must hold. I don't even have any supports marked down here. You know, hey, on Amazon, this is a very good spot to buy some commons. I don't see why not, you know. Easy stop down under Monday's low, that is the must hold. But I really like it for a spot for commons. Daily oversold, as mentioned, low 20s. When was the last time we saw daily low 20s? You know, looking all the way across. Even pandemic times, it didn't get to low 20s. Hey, very key thing to know. Even pandemic times, RSI got to 31 only. Yeah. So, you know, this, what it could mean is 2 things. What I'm thinking is, one, it could mean that there is something underlying, something beneath the surface, that maybe a news coming out or something. And that's why it's causing this huge sell-off, regardless. From a chart perspective, this kind of a low RSI on Amazon, you know, this Amazon we're talking about, right? It's not FSAL or BBIG, small caps like that. Daily RSI at 20s. I can't see. Let's see. When was the last time we got to this low? 22. Oh, the last time we got to the 20s? 22s, 23s. Okay, right here. This was July 2006. And look at what happened here. This is exact bottom, eh? The one before that was actually lower. Sell off, huge gap down. And this was February 2006. So keep in mind, we could be over here. We could also be over here. Regardless, you know, I like the entry area. Even if, let's say it's 37. 30% downwards kind of thing. And upwards from here. We won't measure it to the top. Overbought. So we'll go somewhere over here. That's 50%. I like it simply from an RSI perspective. I like it simply because Amazon oversold not often whatsoever. Daily RSI 22. Weekly RSI 30. When was the last time weekly got to 30? 2008. Really? 2008. Hey, the last time Amazon weekly RSI got to as low as this was 2008. And then the time before that was 2006, of course. And now I like it even more. Monthly, I was thinking of getting a little bit further out calls. But then again, I don't like playing further out calls. So looking at this chart, when you look at a chart like this, also one other thing to know, I don't think I've ever mentioned this on our videos before. When you look at charts like Amazon, Apple, when you look at just simply price action, it's always going to go parabolic. So one thing to fix that is you could do the log chart. This would put things more in perspective on percentage move wise. So looking at this chart, you know, the move recently since pandemic low is actually not that crazy. Monthly RSI is only at 47. There's more room to be sold off on monthly RSI. Yeah, 2008 was way lower. But from a weekly perspective, I like it. Short-term wise, weekly wise, you know, weekly chart, this shows that Amazon has potential to bounce. Is there a gap on the daily? There is a gap. 3027, 3018. There is a minor gap between 3018 and 3027 on Amazon. So I would anticipate that to be filled. 3196. There's a minor gap back here as well. So there are some gaps left behind. Once this gets reversed, we should see very nice upside. Amazon, thank you for bringing it up, miner. Coming back strong. You bought the dip last night? You bought the dip. Hey, what did you buy? SPX? Market? Microsoft? Commons? Last night. So I assume that's not options. Okay, let's BA. Oh, we have not discussed BA. How is that high or low? Holding GP. Whoa, look at the back test of the lower trend line of the descending wedge. What a perfect back test. I really hate trading this chart just because of the fake outs that it has. So for, was it Mandy? Whoever that messaged that day, this specific day, January 18th, when we went live in the morning, I hope you took profits. I hope you took profits. Was it 18th or 19th? 19th. Yes. Yeah. Okay. 1 week ago. Exactly 1 week ago. Because this was a shooting star. And I remember saying that you should take profits. If not all, at least make sure to take some of it. So with that, the projection was coming back to the 0.5. But we did get all the way back down to that lower trend line. Holding the GP on the daily. And today we're gapping up into that 0.5 again. So gapping up into support resistance, I would anticipate at the early market open a little bit of a let's delete these. At the market open, so we're gapping up today. I would anticipate a little bit of a sell before going back up, if there's going to be going back up, bullish action. Now the problem with this is now all these previous resistances are still resistance. So this upper trend line of the wedge, this must break upper trend line as well. Channel's been lost. So we're going to need to find new support. New support ultimately is this key zone. So if you got in yesterday, this is a very nice easy stop. Problem is, percentage wise, it's probably quite a bit of a ways away. So from where we are opening up, 7% from that low. So stop risk to reward wise doesn't really make sense for me personally. Especially entering from here, 7% downwards. You're looking up on the break of this. I would anticipate at the very minimal upper part of the key zone, 17%. So that's 2 to 1 risk to reward, maybe 2.5 to 1 risk to reward. Doesn't really make sense. But regardless, this is why we don't buy until, well, unless you're looking at the bottom. If you're not in from the bottom, I wouldn't really touch it from here unless we see a break of this upper trend line. I like the chart. I like this higher low. Ultimately, we held the GP. Okay. Yeah, BA. AMD. Commons, nice. Amazon Commons. Dip yesterday. Hey, you're opening up nicely, at least. So AMD. Oh, we lost that support yesterday. This is not yesterday was an inside bar day on AMD, but I don't like it so much in the sense that we saw a bounce, a hold of this previous resistance area. Where's my square? About this area. Yeah, we saw a hold of that area, and then yesterday inside bar, but ultimately we closed bearish. Now the ultimate must break is still this upper trend line. So the good thing about this, I rather buy in late, is we can see more downside. We already extended on the daily, and yet the bounce was not strong. Back tested previous high. Lost it. Earnings February 1st. So this is a lost. With that GP lost, now we're looking at an overall GP. And overall is drawing from the low 72.50 to all the way to the high of 164.46. And with that, if we were to bring it over, exactly where we bounce from is that GP. Platinum lines up with the support from back here. But we did bounce exactly from that GP. It is still looking bearish to me. And then not to mention, when we look at SOXL on the gap up today, the market is gapping up to Monday's highs. yesterday's highs, depending on which chart you're looking at. Now, when we look at SOXL, it is not gapping up to Monday's highs. So just something to note. Semis has been extremely strong over the last, how long? At least, if anything, October all the way to November. And since pandemic, looking at SOXL, it's one of the very rare charts that would have provided you with a return of 20 times, 3.57 all the way up to 72 or 74.21. So that's 20 times return on a common share. What? Did I measure this wrong? I would have thought it's 3.5. Yeah, it should be 20 times. There we go. Yeah, 20 times return. There is going to be some decent pullbacks. So as of right now, we are still holding that 0.5. So the chart is still strong. Semis, just be a little bit more cautious. Looking at TSM, looking at... Oh, that's not AMD. Oh, okay. Looking at AMD, NVIDIA is kind of strong. Last I checked. No, still weak. Gapping up. Gap up is decent. So we're trying to hold this trend line. Support, resistance, support, and now we're trying to hold that trend line. On the loss of this trend line, we'll be looking down here. That's NVIDIA. TSM, the TSM actually, it's kind of bearish. Break to new all-time high, lack of follow through, immediate sell-off. We know what happens with this. Then we saw new lows breaking under that last higher low. Actually, this would have been a very nice short play. Complete oversight. Yeah, this would have been a very nice short play, especially on this reversal candle. New highs, extended on the daily, shooting star, boom. Semis looking weak. I would not play SOXS, however, which is the bear side of semis, just because we are somewhat extended on the daily already. Netflix. Tesla keep going up and open. I can see that. Yeah. Let's go back to Tesla. Netflix. Wait, why is the chart so many lines? Don't need that one. Ooh. Netflix does not look good. Losing all sorts of fibs. 0.78 is trying to hold that. GP's been lost. This pandemic low. This is 2008 low. 2019. This is pandemic low. Okay, yeah. So it's already lost the GP since pandemic low. Lost the 0.786 as well. Going back to the 2019 low. Still losing that too. This is the last area I would draw from, or else it's ultimately I think Netflix is already GG'd. Looking at this, aside from this 231, you're gonna be going a far ways back to draw that fibs. You'd be looking back down at the pandemic low, 2018 low kind of a thing. That's where the GP is going to be lining up at 274. Would not be touching this for... Probably take it off my charts, to be honest. Don't like it. Is it in FNGU? I hope not. Or... Oh, fuck. It is. Netflix is really going to drag it down. Man. The one dog. Man. Platinum. No. Points. Yeah. I can see further downside on Netflix. No touchy. No touchy. Will not be touching this chart. Okay. On this, let's see. Gap down. saw lower wicks are forming, but yesterday inside bar gap down, or today's gap up, extremely minimal, 1.8%. That is insignificant. Netflix weak as hell. Ultimately, eventually we will be looking at a gap fill, but this could be one of those scenarios where I don't imagine it to be like Zoom or Peloton. So we will be looking at a gap fill. We are extremely oversold. On the daily is looking at single digit RSI yesterday, 9.46. 9.46. I don't think we ever got that low. No, we didn't. Look at this RSI, 9.46. Just don't rush into the buy. The last time, no, that's not even single digits either. It's never. I want to say never. Yeah, it has never gone this low on the daily RSI for Netflix. So, I mean, if you're looking to play bullish, it could be a decent area for commons. But keep in mind, huge gap down. Look at this daily ADMA. It is catching up fast. Okay, every single day that we stay down here, catch up, and mustard. And from here, what we could be looking at is a continued selling off before a U. This is no longer a potential for a V-shaped recovery because we already staying down here for 2 days. So it could be looking at a bottoming process before coming back up. Now, if that's the case, then that's the opportunity. And we'll be looking at ultimately the break of this will be, depending on how far down we draw. But the break of 409, 410. We'll call it 410. That will be the goal signal on the gap fill play. Because even if it was to be late and you buy at the break of the high of that day, that's still a 24% move upwards. Of course, going to need market participation. But Netflix, this is one hell of a bearish chart. Daily RSI single digits. Whoa. Tesla. Yeah, we have not taken a look at Roku for a long time. So Tesla, I think you probably missed it. On 723 already. Okay, so on Tesla, I can see this continue going up because ultimately this zone hold, this bottom money zone hold, that was key. And today we're seeing a gap up above yesterday's high, above Monday's high. That is very notable. Earnings is today, so I don't know if you're putting options or common shares. I would not be touching options especially on the day of the earnings. But hey, sometimes you get paid. I think 80-90% of the time it don't work out because of the implied move on it. And with this, I will be looking at, I was looking at common shares. Actually, I was holding common shares on Monday's bounce. So I played that bounce with common shares. But what I ended up doing is now I'm just focusing on ETFs. Just make it easier. I don't want to be holding individual tickers, Tesla, Amazon, Apple, which are all looking very nice. ETFs just make it easier. And it's triple leveraged. Roku. Let's close it off with Roku. Actually, I gotta check if there's any other tickers. No. Okay, so we'll close it off with Roku. Ooh. One bearish chart. 0.786 is holding, trying to hold. Bouncing from 0.786. Yesterday, not an inside bar. So it's actually a little bit bullish on Roku. So yesterday we did break into new highs. Something to note. Today we are gapping up into Monday's high again. Key zone. This must hold. Where we are right now, it must hold. If that is lost, well, technically the must hold is back here. And once that's lost, we saw what happened, right? So that's already a 40% down. With that, the next support down I'll be looking at is like around 100. Or we saw some rejections here, support. Another rejection here. So it's going to be around that area. Let's draw it out. We'll draw it straight from, nope, this low to this high. It's not even that strong. Rejection, support, support, rejection, support. So if this is current area is lost, we'll be looking down at 100. So we're right now at 150. That's another 50%. Another, sorry, 33%? Yeah, 33%. So if you were to buy down here, of course, that's going to be 50% increase. But looking at this, ultimately is still this uptrend line that must break until. So if you bought, looking for that break, call it 200, would have been faked out over here, right? Would have been faked out, and then that's another drop of 30-40%. Now if we do buy here, same idea, it could go sideways, break out, fake out, and then come back down another 30-40%. And that's why I don't want to play this. Not yet. Daily RSI is getting oversold. There is a potential for daily bull divergence. A very nice daily bull divergence now, actually. Very nice daily bull divergence. But the reason why I don't want to play it is the last time that we saw a strong daily bull divergence, that's exactly where the fake out came in. So the last time we saw a strong daily bull divergence was right here. Look at that RSI. Very nice. And then went sideways and boom, dropped further. So with this, we are pretty close to that upper trend line already. Even on the break, just be a little bit more careful. Maybe even redraw the trend line. Nope, that still wouldn't make sense. I'll take a little bit more time on today's live. There's no action to be done until FOMC anyways. So yeah, that would have been a fake out. Regardless of how you draw it, that would have been a fake out. Maybe here, that's still a fake out. Don't like the chart. Oh my god. So even on the break of this upper trend line, just be careful. You could be looking at a bottom fish area right here. This key zone, this 0.786 must hold. On the loss of this, GG. 0.786, already a weak chart. Just be careful. All right, so that's Roku. That's today's video. Hope you guys enjoy the content. If you know anyone that can benefit from the content we share, the videos we share, please consider sharing our channel with them. All right, thank you for watching. I will see you guys in the next video.